Hello everyone, and welcome to this presentation of what your next strategy should look like. Now in today's educational presentation, I will share with you two edges that you can start implementing right now and apply to your current strategy, or else you can actually make and develop your own strategy based off of these edges, where as you look in this example, once these edges are applied, even in markets that appear to be going sideways, you will be able to generate buy signals such as these, and hopefully we can take advantage of really nice moves that go in the direction of the trend. As we look at this recent signal that was set up by the same two edges I will be teaching you in Apple, this was just last week, you will see that these same two edges produced a buy signal right here, and we all know what happened to Apple. Apple gained 10 points in the next 3 days. So hopefully that is what your new strategy and your next strategy will look like. And welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And as you can see, we are all about educating you as traders. We're a little bit different than other companies in that our sole focus and purpose is just to educate you. Even though we have strategies that generate signals and many different methods, our goal is more about teaching you these methods so that ultimately you can take the power back in your own hands and make your own trading decisions. It's been my experience that that's the only way a trader will ultimately become consistent, by being in charge of their own trading and not relying on an outside source, but relying on their own information, their own knowledge to make their own trading decisions. And the reason why I say this is because I've been trading for nearly 40 years now. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. That's where we get the name Specialist Trading. Specialist doesn't mean you're any better than anyone else. It just meant that you specialized in roughly about 50 stocks. So if anyone wanted to buy or sell that particular issue, such as IBM or waste management, you had to go up to the trader who specialized in that particular issue, and he made the market. He either bought or sold it to you. So I did that for roughly 9 years on the floor. I traded through the crash of 1987 and the bull market that followed. I've traded in straight up, straight down markets, sideways markets, uneventful markets, crazy markets. I know what works in terms of consistency, and I know what doesn't. So that's what we do at Specialist Trading. I teamed up with Pro Trader Strategies about 8 years ago, and all we do is teach and mentor my students around the world and in virtually every state in the United States all of the techniques and methods that I've accumulated along the way and that I currently use in my own trading. Now today I'm going to share with you two distinct edges that you can apply once again to your own strategies, and what I really believe what you should be using and what your next strategy should look like. But before we begin, as always, we are required to show you this. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results in the form of charts, so you'll be able to see exactly firsthand what these edges look like. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. Once again, we are legally required to share this with you. So as you're taking a moment to view our disclaimer, I would also like to take this time to invite each and every one of you, if you haven't done so already, to begin following us on Twitter. As you can see here, there is our handle. You may want to copy that down, the abbreviation for Specialist Trading. Each day I post new information anywhere from signals that were generated by our strategies or techniques to actual words of wisdom I've accumulated along the way that will help you understand a little bit more about trading. So lots of great information. Feel free to follow us on Twitter. All right, so as you can see here, once again, my goal is not simply to force feed you signals. My goal is not to tell you what the perfect market or time frame is to trade the way so many other websites do. We don't believe in that. We want you to decide what market to trade. We want you to decide what time frame or what type of bar to use, or what actual currency pair, or what future. You see, because that is how you become consistent. Our only job, once again, is to supply you with the information so that you can become consistent in your trading. So as you see here, my goal is to teach you, not to trade for you, but to teach you how to trade with the Specialist Edge. This is the same edge that was able to turn my trading around about 40 years ago. When I first started trading, I struggled tremendously, and it was able to sustain me. All the knowledge I accumulated was able to sustain me for that amount of time, and hopefully I'll be able to sustain you with all the information I provide all of my students and members. Now, since this is an educational presentation, I love taking questions from my students, but please ask the questions at the end. That way, we won't slow down the presentation. As I stated, I have a lot of examples to share with you, a lot of things to teach you today. And if we take every couple of minutes to stop and ask a question, we'll be here about 4 hours. So let's wait till the very end, because oftentimes if you just wait for the next slide, your question is answered. I will just answer the most common question, and that is this being recorded? Yes, it is. So if you have to leave early or if you have technical difficulties, contact ProTrader Strategies. They will send you a link to this recording. Okay. So once again, if you should happen to have a question, something doesn't make sense or is not clear to you, kindly wait till the end of the presentation in just about 30-35 minutes. Okay. All right. So let's begin now. And let's start out by sharing with you these two edges that you are going to be learning today. These are the two edges that you should be applying to either a strategy that you currently have, or you should make a strategy. What we said in the title, this is what your next strategy should look like. It should contain these two edges. Now, the first one is going to teach you how to trade in sync, because everyone knows you should be trading in sync with the market. But so if everyone knows this, why do most traders fail? Well, we're going to show you how simple it is to trade in sync with any market in any time frame. And then we're going to apply edge number 2, which is a particular price bar pattern. We're going to show you that this price bar should be in any strategy setup, regardless of what it's based off. Could be based off news, could be based off the full moon. It doesn't matter, but you should be looking for this particular price bar pattern. And then you're going to see how we've used these in probably one of our most popular as well as consistent strategies, which is strategy number 4. So I'll show you some examples of that and how to increase your odds even more with this particular strategy. Okay? All right, so let's begin. Edge number 1. We all know that we must trade in sync with the trend. That's trading 101. Everyone probably has learned that the first day of trading, that you must trade in sync with the trend. But if everyone knows this, why do upwards of 80% of all traders fail? We think it's because most traders have a different idea of what the trend is. Some traders say, well, the trend, Steve, is higher highs, higher lows. Or the trend is discerned by looking at the higher time frame, and the lower time frame has to be in sync with that. Okay? Well, let's look at what we feel is the simplest and most powerful way of finding out what the trend is, the overall trend in any market or any time frame. Okay, let's look at this generic chart right here. We specifically took out the title and the time frame because we don't want you to think that it only works in one market or one direction. As we look at this, someone would say, well, Steve, there is no trend here. The guy that I subscribe to says that we want to stay out of markets like this because you're basically going down, then back up, then back down again. So this is what's called as a rangy market, and no one ever makes money in rangy markets. So there's no trend here. I'm going to stay out. I'm going to stay on the sidelines. All right? Well, according to what we apply, that's not true, because the way we find out what the overall trend is by simply adding a 50-period moving average. That's it. And then we ask ourselves, where is price in relation to that moving average? Now, as we see in this case, if price is above, well, then the overall trend is up. It's that simple. And if the overall trend is up, we will never be shorting anything. Doesn't matter if this is our 5-minute chart or a monthly chart. We don't short above the 50-period moving average. Remember, we want to make you a consistent trader. Just by using this one technique, it will increase your odds for consistency tremendously. Now, conversely, let's look at this setup right here. Once again, someone would say, well, Steve, we're in a sideways market. There's no real idea of what the trend is. I'm not going to do anything until I get a better idea. Not true. We ask ourselves, where is price in relation to the 50-period moving average? Price is below. So if price is below, then the overall trend is down. If the overall trend is down, we are not going to buy anything. We will never buy anything if the overall trend is down. We're only going to be a seller. Now, this doesn't mean that we'll simply sell at the market, or if we're above, we're going to buy at the market. What it does mean is that we'll now only look for sell setups, regardless of whatever strategy we have. Now, I've often stated that this tool or this technique is so simple, but if I were stranded on a desert island and I could only use one of the tools I've accumulated along the way for trading, it would be this, because this one tool of simply using the 50-period moving average has saved me so much time and effort and money simply by putting me on the right side of the market. Okay, so that's edge number 1. Now that we know what side of the market to be on, we want to start having some structure to our trading. So we're going to look for bars that close in either the top or bottom 25% of their range. Okay, so what does that mean? All right, if we are above the 50-period moving average, we want to look for bars that look like this. In other words, they close either at the top or in the top quarter percent of their range. Now, people always get confused. They go, well, I don't understand. How do you determine that? Well, once again, it would not matter if this were a 1-minute bar, a tick chart, or a monthly bar. All you have to do is simply divide the bar by 4 separate but equal parts, all right, as you see right there. If you close in the top 25% and you are above the 50-period moving average, this is a tremendous clue. This is a tremendous edge to have. I know, once again, it's rooted in simplicity, but this is the market. The only thing you should be listening to, this is the source of what you're trading, telling you that this is most likely an indication to buy. I mean, I can't think of a better clue coming from a better source rather than some guy on TV or somebody in a chat room. I'd rather listen to what the market's telling me it's going to do, because this is what I'm trading. So this is a tremendous edge, and most likely the stock future currency pair will continue to go in its upward direction after you see this pattern. Now, a lot of people always get confused. They say, well, Steve, I don't trade regular open, high, low, close bars. I trade candlesticks. All right, the same concept applies. Nothing changes because we're going to look at a candlestick. So in other words, here's a candlestick formation here. The same thing, you just take the top 25%. In other words, we just measure from the top of the wick to the bottom of the wick. That's your range. The range is never determined from the open to close. I don't know where people got that idea from. The range is the top of the wick to bottom of the wick, just like you're at the top of the bar, the bottom of the bar. Divide by 4 separate but equal parts, and if you close in the top 25%, the market is giving you a clue that it wants to go higher. Now, it's not saying that it has to go higher on the next bar. It's just giving you a clue as to most likely it's going to continue in that direction. All right, so let's look back at our generic chart here. We are above the 50-period moving average, and here are 2 bars that close in the top 25%. Now, after you see the first bar in green, well, as you can notice, we went up a little. Now, I know it doesn't look like a lot, but you know, for all you know, these are monthly bars, and whatever we're looking at, the issue went up maybe 20, 25 points. Now, as we look at the second one, it's a little bit more pronounced here, because look what happened after that. So do you see how the market is always giving you clues as to what it wants to do? The only trouble is we never listen to the market. We always think it's more valid to listen to some guy on TV or in a chat room or even in a webinar. But we have to learn to listen to the market, because that's where the most valid information comes from. Same thing with a bar to the downside. Now, if we are below the 50-period moving average, we want to look for bars that close in the bottom 25%. All we do is divide by 4, as you can see here. And if we close in that bottom quarter, well, the market, once again, is telling us that's an indication to sell. That's a tremendous edge to have, all right? Once again, if you don't trade standard open, high, low, close bars, all right, just apply a candlestick. It makes no difference. Measure the top of the wick to the bottom of the wick, and if you close in that bottom 25%, it's the exact same concept. Nothing changes. So as we look here, we are below the 50-period moving average, and we have a bar here that closes at the bottom quarter. And look what happened, okay? Now, we didn't know what caused this sell-off to appear. We didn't know if there was news or if there was volume. It doesn't matter. All we need to do is look at the chart in front of us, and the market tells us what it wants to do. Our job is just simply to jump on board. So you see how powerful these edges are, and these edges are probably different than anything you've ever learned before, because we always were taught to listen to an outside source. Well, we have to listen to the institutions. They know what's going on, right? We have to listen to the news. You know, there's news announcements coming out all the time. There's going to be some Fed announcements. There's going to be some earnings. That's what's going to tell us what direction to trade, right? The market usually tells you in advance what it wants to do, well before any news events, well before any type of signal coming from volume or support and resistance, things of that nature. All right, now we took these 2 extremely important edges that you should be applying to your own strategy, and we put them together to form one of our best strategies in terms of consistency. This is strategy number 4. And basically, there are 3 rules here. I just gave you 2, but there are 3 rules to generating a signal. If we look here, here are the highlights behind this particular strategy. It's for all traders, beginners to advanced. So it doesn't matter if you've been trading 2 weeks or 20 years. Everyone gets the same basic format. It was designed for traders looking to catch quick momentum moves. The reason why is because I first found out about it over 30, 35 years ago when I was trading on the floor of the exchange. This is where we began to use this strategy, and we would usually use it to get in and out of a trade in maybe 2 or 3 minutes. But now we have devised ways in which to stay in much longer if you'd like. So you don't just have to be in and out quickly. You can stay in weeks, months, or even years if you'd like. All right. The intensity level from 1 to 3, if 1 were the most intense of all strategies, meaning you couldn't even leave your computer, to 3 being the most relaxed, you just enter an order and walk away. It's right in the middle. It's a very comfortable 2 level. It only uses one indicator, and guess what? You already know what it is. It's the 50-period moving average. That's how simple it is, okay? This strategy works in any time frame, in any direction, and in any market. So it doesn't matter what market you trade. It doesn't matter what you look at. You can always find setups with strategy number 4. Now, if you become a member of our course here, you're going to receive automatic buy and sell indications, but these are for educational purposes only. You know, it's not our purpose to give you an add-on that generates buy and sell arrows so that you just blindly take the orders. That's no different from a signal service. And that's not our goal once again. We want to teach you how to spot these things on your own. So these automatic buy and sell arrows are simply for educational purposes. Ultimately, you'll be able to spot one just by looking at the chart, and you'll know where a buy setup is or a sell setup. Now, our edge here is consistency. I'm not going to sit here and tell you that every strategy for trade works out perfectly. You know, some are losers, some are small losses every once in a while, but that's okay because consistency is all about 2 steps forward, 1 step back. From time to time, if you do get a small loss, most likely you will be able to make that back with the next signal. Okay, let me show you some examples of how this works. And this is how I really believe your next strategy should look. Once again, in order to generate a signal, 3 rules are needed in strategy number 4. I just gave you 2. All right, so you have the majority of the rules that become in generating a valid buy or sell setup. Now, this is what your next strategy should look like, and you already have 2 of the rules. As you look at Apple right here, this is the example I showed you earlier, all right? Where is price in relation to the 50-period moving average? Obviously, price is above, right? We're above for all intents and purposes. The majority of price bars are above. Even though we opened below, we closed above here. So, which direction is the overall trend? The overall trend is up. So that means we are in no way going to even consider selling anything, all right? No matter what earnings come out, no matter what bad news comes out about an Apple product, we're not going to sell, okay? And where did we close? We closed in the top 25% of the range in this particular bar right here. So those are 2 of the rules that have been met. Now the 3rd rule has been met as well, but I'm sorry, I can't divulge what that is because that wouldn't be fair to the people that have spent really good money on purchasing strategy number 4 that are already members of our course. All I can tell you is that the software generated a buy signal. All right, this was on the 12th of September. And look what happened. Apple went straight up after that, okay? Obviously some news, something happened. We knew about this well before the news even came out. How about WYN, win? All right, first question we ask ourselves, edge number 1, where is price in relation to the 50-period moving average? Price is below, all right? So are we going to be a buyer at all? Absolutely not. The odds are in our favor if we only look for sell setups. All right, so we want to look for sell setups, and what do we have here? We have a bar that closes in the bottom 25% of its range. Now, at the same time, the last rule is met by strategy number 4, and all the requirements are now met that can generate a sell signal. So the software generated a sell signal. But once again, after you learn what to look for, you won't even need this software generator. You'll know where a sell signal has been generated and one hasn't. And so that would have given you the signal to go short, and look what happened, okay? See how simple this is? All we're doing is learning how to listen to the market, not to outside sources. And by listening to the market, you are now taking control of your own trading. You're not relying on someone or something else to tell you what to do anymore. You don't have to pay for all these services. You can simply look at any market, any time frame, any direction, and you'll know that a signal has been generated or not. Now, as I stated, the beauty of strategy number 4 is that it works in any market, any time frame, but it is based on consistency. 2 step forward, 1 step back. The 1 step back means that every once in a while there will be some small minor losses, as in this case right here. Now Tesla is below the 50-period moving average on this older chart, all right? And we have a bar here that closed in the bottom 25% of its range. So the strategy generated a sell signal. It's a valid sell signal to go short. At this point, you're all excited. You're thinking, boy, this thing's going to go straight down, and look what happened, okay? So not every signal will work out perfectly. It's just, it's a law of life. Nothing works out 100% of the time. It would be silly if anyone told you that, and you should run if any presenter tells you that this strategy works 100% of the time. Things don't. I mean, markets change, environments change. But there is a way to increase our odds for success. All right. So let me show you a couple more examples here. Here's another example in URBN, now urban. As we can see here, this was a valid signal to go long. All right. Let's say you purchased the strategy and this is your first trade to go long. Everything's met. The strategy confirms it. So you go long and guess what? Generates a loss. All right. Now price is below the 50 period and a sell signal has been generated. But you're a little bit gun shy. You don't want to take this one the way so many traders do. They lose after a while and then they just say, forget it, I'm not going to trade anymore. And then that's the one you should have taken because you could have made back everything. All right, so once again, we have to ask ourselves, how can we increase our odds for success? Well, you've heard me speak about this before, and this is the best tool I know of that puts you in sync with the short-term trend and increases your odds for success, and what I strongly believe your next strategy should have in it and what it should look like. This is the PET D. We want to add the PET D, which is a proprietary trend filter, short-term trend filter. Now what we've done is calculate it into an algorithm, a color bar algorithm. So if you see a series of green bars, there's nothing to figure out. There's no patterns to look at. There's no higher time frame to look at. There's no moving averages. All you have to know is that if you see a series of green bars, the short-term trend is up. Conversely, if you see a series of red bars, the short-term trend is down. It's that simple, okay? Because what the PET D is not an indicator. It's not a strategy. It's a translator. Once again, it's taking all of its information from the market on a tick-by-tick basis, and it's calculating and translating what the market wants to do, okay? It's not forecasting. It's not predicting. It's just showing you at the end of that bar what the market wants to do. Does it want to continue going higher? Does it want to continue going lower? Let me show you a real world chart here of Apple, okay? Unfortunately, this is the way most of us trade, all right? We see something start to go up. We want to get a little bit more validation. We want it to be in sync with the higher time frame. And by the time it gets up here, well, we figure, okay, this is safe to buy, okay? So we buy around here, and it goes sideways to a little bit higher for a week or two, and then the bottom falls out. And now we're stuck with a loss, okay? Now, what if we could apply some type of great trend directional tool that could tell us in advance, well before we got into the trade, that we were going higher or lower? Well, let's simply add the PET D. Remember, the PET D just colors the bars. Green means you're in a short-term uptrend. Red means you're in a short-term downtrend. And once again, we can see the beauty of the PET D because as we were going higher, the bars were all green, and as we were going lower, the bars were all red. But the beauty of it is how well it can determine in advance what the trend is going to be. Because as most of us usually decide right around here that we're in an uptrend, look what the PET D did. All the way back here, we had 3 bars that told us, well, we have 3 consistent bars here. We might as well start to look for uptrends because 3 consistent bars is pretty much the benchmark. And we went up higher. Now when we had 3 consistent red bars, well, that was telling us a short-term trend to the downside was most likely beginning, and we could have gotten out well before the market fell out of bed. So do you see how valuable adding the PET D is to your strategy? Let's see how valuable it is adding it to strategy number 4, all right? Because when we combine the PET D with strategy number 4, we create probably one of our most consistent packages together. We call this the dynamic duo. We have had students from around the world, from India all the way to China and the United States, telling us how well these 2 methods work in unison together. Okay, that's why we call it our dynamic duo, because they work. There's like a synergy that when PET D is combined with strategy number 4, you increase your odds even more. All right, let me show you what I mean here. I'm going to share with you the basic rule for applying this dynamic duo. If strategy 4 generates a buy signal, remember I gave you 2 of the rules already that will generate a buy signal above the 50-period moving average, and we close in the top 25%. Well, then the PET D must color that 1 bar green. It doesn't matter if every bar before that was red. It's just that 1 bar, that bar that closes in the top 25%, must be colored green. That's it. Now, conversely, if strategy number 4 generates a sell signal, All right, you have two of the rules to that. We're below the 50 and we close in the bottom 25%. Well, then the pet D must simply color that bar red, just that one bar. We don't care what the other bars were prior to that, the other colors were. Just that one bar that closed below the 50 and closed in the bottom 25% should be colored red. If you do these simple things, you've increased for your odds for success considerably. Let me show you what I mean here. Let's go back and look at those examples. Remember we had that losing trade in Tesla, all right? How could the pet D have helped us with this losing trade? Well, remember, it is a valid strategy number 4 sell signal. But in order to have the power of the dynamic duo, we need that sell signal to be colored red. So let's add the pet D. And as we can see, that sell signal was colored green. So the pet D did not confirm that trade. It said, no, don't take that trade. And you would not have taken that. And some of the best trades are the trades you never take. You would not have had a losing trade. Then you would have gone on and looked for another trade that was in sync with the pet D. How about that trade in Urban? Okay, well, the first trade was a disaster. We bought it and it went straight down. The second trade we never took because we were too frightened. All right, let's add the pet D and see if it could have helped us. Well, remember, the buy signal needs to be colored green. So as we add the pet D, what color is that buy signal? It's red. So right off the bat, we would never have even taken that trade. So you wouldn't have been gun shy to take the sell signal because the sell signal was colored red. So it's confirming it. And we all know what happened later on in Urban, okay? So remember, once again, we're not saying that this now increases your odds to 100% winners. We would never say that. But what we're saying is that you will increase your odds for success because the pet D will keep you out of trouble many times and confirm the ones that you should be in. All right, so let's look at some more current examples now with stocks as applying the dynamic duo. And this is really what your next strategy should look like. JEC, all right, first thing we ask ourselves, rule number 1, where is price in relation to the 50 period? Price is above. So we know we're only going to be buying. I don't care what some guy says in a chat room, if this stock is overbought or if there's bad earnings going to come out. We don't listen to those things, all right? If those things work so well, 80% of most traders would win or be successful, but it's the opposite. So we're only listening to the market. All right, so the market is telling us the overall trend is up. All right, now what do we have here? We have a bar that closed in the top 25% of its range. And now the last rule of strategy number 4 that generates a buy signal is also been met. Once again, I'm sorry I can't divulge what that is, but trust me, it was met, and so the software generated a buy signal. All right, and it was confirmed by the pet D. As you can see here, once we added the color bar, it was confirmed. So the pet D was saying it's okay to buy this as well because the overall trend and the short-term trend are in sync with the rules of strategy 4. And JEC rose 6 points in 1 week. Let's look at PRGO. This is an example of sometimes it takes a little longer for things to get going, but ultimately, if you stick with it, most likely you'll be on the right side. All right, first thing we ask ourselves, where is price in relation to the 50? Now, price is below. Even though that last bar kind of opened above, it still closed below. So the majority of the price bars are below. And we have a sell signal that was generated right here. Okay, so in order to take that sell signal, we also see that there's another one generated later on. So we can decide, if we want to take both or just one. And remember, we know this is an expensive stock, and we know not everyone can short stocks with their account size. You could use the same method and just simply apply options, some type of negative option strategy or just purchase puts. Many of our students don't even trade the stocks. They just purchase options. They purchase calls, puts, or some type of strategy that goes in that direction. So there were 2 sell signals generated here, all right? Now, how would we have known if we should have taken any of these, one or both of these? Well, you just add the pet D. Remember, sell signals need to be colored red. And both were. So even though nothing really has happened yet, the stock hasn't fallen out of bed, nothing has moved yet, we're still basically going sideways, the pet D is confirming, saying it's okay, stay short, because most likely this is going to go lower. And ultimately, the stock dropped 40 points in the next 3 weeks, okay? Took a little while to kick in, but it does. Once again, there was some news or something that caused this to drastically fall out of bed. We didn't know anything about it. No one called us up from the company. The CEO didn't call us up and tell us to short the stock. We had no idea. The only information we took was from the chart in front of you that you're seeing. How about letter K? Okay, this was coming into July. Now, even though it looks like we're going sideways, that there's absolutely no trend at all in place, this is the way most people look at stocks or look at any type of charts. We don't look at it that way. First thing we ask ourselves is, where is price in relation to the 50? And we're above the 50-period moving average. Even though we're right next to it, we are still above. So the overall trend is up. We're not going to sell this. We're only looking for buy setups. All right? Now we have a bar that closed in the top 25%, and strategy number 4 generated a buy signal. So if you're a little gun shy, once again, and you're not certain you really want to take this or not, maybe you want to have a little bit more confidence. Well, the best thing I know for adding confidence is to add the PET D. And the PET D colored that one bar green. Remember, we only need that buy setup bar, the bar that closed in the top 25%, to be colored green. And that's all we needed. And as you can see, the stock went up 10 points in the next 2 weeks. How about HRB? Now, this is a great example of sometimes where the PET D doesn't actually give you the confirmation, but it keeps you out of a terrible trade. Now, this was a valid buy signal, a little bit more advanced than most buy signals because we're kind of oscillating above and below the 50 period. But since we closed, as that we see on that last bar, we closed above the 50 period moving average and we closed in the top 25%. That's a valid signal to go long. Even though a little bit more aggressive, a little bit more advanced, you still could have taken that signal if you wanted to. But for our traders who like to trade with a dynamic duo because it gives us that much more confidence and that much more consistency, all you had to do was apply the PET D to see if that was a valid setup. And once again, we're only concerned about that one bar, and what color was the bar? The bar was red. Remember, in order to go long, we need a green bar. So right off the bat, even though strategy number 4 met all the rules and requirements to go long, the PET D was not confirming it. The PET D was saying, listen, I know it meets all the rules and the pattern and everything, but the short-term trend is down. We don't want to buy and a short-term trend is down. So you would not have taken this trade, and look what happened, okay? And you see how well before we had that large gap down to the downside here, well before that, we had at least 7 or 8 red days that were telling you in advance we are in a short-term downtrend. Even though we were still just very close to the 50-period moving average line, this was telling you the short-term trend is down, and once we had 3 closes below the 50, the overall trend was down. So you had plenty of warning to get out of this stock. Even though you may have sold it somewhere around here, you would have been advised to do so if you look back in hindsight where the stock really fell out of bed. Now the beauty of the PET D and strategy number 4 is that once a really nice trend kicks in, well, even if you missed a couple of trades, there's always more being generated. As you see here along the way down, more strategy number 4 sell signals were generated that were all profitable. Now, we can apply this to the futures markets. Let's look at the futures markets, and I want to start out by sharing with you an older chart. This is about a year old, in August of 2015. I don't know if a lot of you remember, but in that month, last year, the market had a tremendous downside fall. There was a lot of rumors about China. There was also stuff going on about high-frequency trading. And at one point, the market was down over 1,000 points intraday. Okay, so a lot of people were saying, boy, there's no way a little guy like myself can make money during markets like this. Well, that's not true. Let me show you what strategy number 4 and the PET D generated in that particular month. Okay, here's the dynamic duo in action. Now, on the 10th of August last year, a buy signal was generated. Okay, now, if you had had the PET D, well, guess what? That was a valid buy signal. So this is just a case of where consistency takes its place in the example of one step back, because this was a losing trade. So we don't try to hide anything from you. As I said earlier, from time to time, you will have some small minor losses. So this would have been a trade you got stopped out of because it was confirmed by the PET D. But that's okay, not to worry, because remember, there's always signals being generated. And if we go just about a week or so, advance into the month of August, we see here that another sell signal or another signal was generated, but this time it was a sell signal. And guess what? This one was confirmed as well. So we closed below the 50 and it's colored red. So why not take this one? Because this was the one that was well in advance of the 230 downward point day in just 3 days, okay, and the 1,000 points in 1 day. So you would have easily made back what you lost on that first trade and made even more to cover it. So this is what we mean in terms of consistency. Not every trade is a winner, but because it's so consistent, oftentimes you'll see that you'll make up your losses very soon with the next trade or two. Now let's go to a time frame that most people trade. Let's go to a 5-minute time frame, okay? This is last month. As we can see, just the same rules apply. It doesn't matter if we're looking at a 5-minute chart. Nothing changes. Excuse me. If we're above the 50, it's just like we're looking at a daily bar or a monthly bar. We're only going to be a buyer. There were 2 buy signals generated, and if you add the PET D, you'll see that they were both confirmed. And that's 10 points in 3 hours, okay? So that's $500 per contract. Now that's a 5-minute time frame. Let's go to a 10-minute time frame, and I want to go back to June of this past year. And you remember when they had the Brexit vote in Europe, okay? How the markets fell out of bed and how everyone was saying, boy, this is terrible. The market's going to fall out of bed on this news. This is terrible. Well, here's a 10-minute chart of what happened that day on the 24th of June. Obviously, we gapped down much lower, as you can see right here. And a lot of people were thinking, well, should I buy here? You know, we've gapped down so much. I'm sure we're going to have a bounce. But we don't think that way, remember, because that's trying to predict what the market's going to do. We don't predict anything. We just listen to the market, and it tells us what it wants to do, and then we just jump on board. It's a lot safer, a lot easier. We just have to learn what to listen to, okay? So the first thing we do is ask ourselves, where is price in relation to the 50? Well, on this 10-minute chart, price is below. And we only have to look at the 10-minute chart. We don't need to know what the daily chart is doing. We don't care. If we're trading the 10-minute chart, that's the only chart we look at. Okay, so we know we're going to be a seller the entire day. And guess what? A sell signal was generated in the first hour of the day on this 10-minute chart. But if you were a little, frightened to take this trade, thinking that, well, maybe there's going to be a big bounce here. How do I know we're not going to have a big rally? All you had to do was add the PET D, and the PET D confirmed the trade. And look at all the move to the downside. You could have stayed short the entire day. Okay. And if you were lucky enough to hold on, well, you had another sell generated right before the close. And on the opening of the next day, that's 70 points to the downside, $3,500 per contract, okay? Just by purchasing one contract and holding it for 24 hours, that was 70 points. Now let's transfer over to an entirely different market, an entirely different time frame for all you currency pair traders. Let's look at the British pound. Here's a 15-minute chart of the British pound, okay? Just to share with you that nothing changes because we've looked at a different market or a different time frame. Now, we are above the 50-period moving average, even though we're just barely touching and kissing it. We have a number of buy signals generated, and they were all validated and confirmed by the PET D. And even though it took a little bit time for this to kick in, ultimately, the rally ensued, and that's 600 pips, or roughly $6,000 per contract. We can go to a weekly time frame of the Canadian dollar, okay? 2 buy signals were generated using strategy number 4. We're above the 50-period moving average. The 2 edges I shared with you today, what your strategy should look like, are incorporated right here in front of you, but we want to confirm it with the PET D. So we see here that the first signal was colored red, so we would not have taken that if we trade the weekly Canadian dollar. But the second signal was confirmed. So you could have easily got long that, and look what happened with the Canadian dollar. Okay, up 1,100 pips, or $11,000 per contract. Now, once again, we're not saying you would have held that entire time, but that's your choice. It's up to you. Remember, we're not going to tell you what to do or how to trade. We're just giving you this high-level consistency methods that have stood the test of time. Some of our members like to stay in as long as possible. Others like to get in and out quickly. There's no right or wrong way to trade. The only wrong way to trade is when you try to mimic someone else in a chat room or what they're saying on TV. Remember, make your own decisions and you'll get on that road to consistency. And then lastly, we can look at a monthly chart. All right, we haven't looked at monthly charts yet. The same principles apply. Where is price in relation to the 50-period moving average? Price is below, so we're not going to buy anything. We're only looking for sell setups. And here is a bar that closed in its bottom 25%. So the strategy met all of its 3 rules to generate a sell signal. If we're an investor in the Australian dollar and we would like to trade longer term, we just want to add the PET D to this monthly chart, and it was confirmed, okay? Virtually every bar was red on a monthly time frame except for one. So we know that we've got a pretty strong downtrend going, and on a monthly time frame, the Australian dollar went down 2,300 pips, okay? $23,000 per contract. You could have held it as long as you wanted to. So Let's recap before we go into question and answer portion of this presentation. Here's what you learned today. Here's what your next strategy should look like, okay? You should use edge number 1, the 50-period moving average. That will help you trade in sync with the overall market. If price is above, only look for buy signals, whatever they're based off of, okay? If price is below the 50, only look for sell signals, whatever they're based off of, okay? We really feel that just using that simple technique will increase your odds for consistency tremendously. And then once you find out what side of the market you should be trading, look for a particular price bar that is closing either at the top 25% or bottom 25%. Okay, this is a clue coming from the source, not coming from some guy on TV or somebody in a chat room, but coming from the source, the chart you're trading, the market you're trading. It's telling you what most likely it wants to do. If it closes above the 50 and in its top quarter of its range, it's telling you that most likely it's going higher. It's a tremendous edge to have. Conversely, if you're below the 50 and you close in the bottom 25%, the market is telling you it most likely wants to go lower. So what a great edge to have in your favor, okay? And then lastly, we put these together with one more requirement that unfortunately we can't share with you, and it created one of our most consistent strategies today. Strategy number 4, a great strategy traded in virtually every state in the United States and over 100 countries around the world. But remember, strategy number 4, even though it's a really consistent strategy, will have some small losses from time to time. So how do we increase our odds for success? We add the PET D. The PET D is a great short-term trend identifier. It's a proprietary algorithm that I've been using for 35 years. It was first given to me on the floor of the exchange, but we had to calculate it by hand. But now we've made this algorithm a color bar tool. So all you have to do is simply add the colors to your bars, and you know whether you should be confirming a buy signal, confirming a sell signal. This is what creates probably our most consistent package, trading package today. It's called our dynamic duo. Okay, so here's what we're going to offer you all today before we go into question and answers. We're going to offer you the dynamic duo. This is our strategy number 4 along with the PET D tool, okay? You're going to get instant course access, okay? We're roughly giving you 20 videos, online videos to study, and they're yours. Remember, information is key. Education is key. We're giving you 20 online videos to study and educate yourself so that you can put yourself in power of your own trading. This comes with all the entries, all the different exits, all the different stops. You can pick and choose what you want to apply yourself. This also comes with the educational signal alerts, so you can know when a buy or sell signal has been generated, all right? We also give you 4 PET D trading techniques. This also is included on top of strategy number 4. You're getting different techniques to apply the PET D. Once again, both of the add-ons are included in this, and I think the most important thing is that you're getting nearly 40 years of experience as your personal mentor. You can contact me whenever you'd like. Send me an email, and I'll respond as quickly as possible to answer any question you have. This is our great dynamic duo special. Now, I think one of the things we never touched upon, we pretty much touched about daily bars and short-term trading, and we covered one monthly bar. But let me show you how you can also use the PET D. We can also use the PET D for long-term investing, because I know not everyone is simply a trader. We have a lot of longer-term traders, a lot of people that like to use this for their IRAs or their retirement accounts. So let me show you one of the things you can apply here. Here is a monthly chart of the S&P 500 coming into the first half of this year. Now, as we look at this, each one of these bars is a month, going back roughly 20 years, back to 1994, 1995, a little over 20 years actually. And as we look at this, it seems actually simple in hindsight to see all these peaks and valleys of the market. As we see, we went straight up into 2000. We hit the dot-com crisis, and then the market came crashing down. Then we bottomed out in 2003, and then went straight back up again to the old highs until in 2008, we had the banking and financial crisis, where we fell out of bed once again until 2009, 2010, and then we've been going straight up ever since. But a lot of people are worried, thinking like, well, when's this going to end? Have been sustained now, going up, pretty much up for a good 7 years now. Isn't this supposed to end pretty soon? Or I don't want to be caught with my long-term investments, okay? Well, what if there were a tool that could help us be in sync with the trend? Well, once again, the PET D, even though it is based off of short term, you can still apply it for monthly bars, and in this case, the S&P 500 as a directional tool for the overall market. Now, the way we like to apply it with this is by simply confirming 3 consistent colors. So if you see 3 consistent green bars, well then the overall trend is up. If you see 3 consistent red bars, the overall trend is down. So how could the PET-D have helped us on a long-term basis? Well, we simply apply it, and as you can see here, going back to 1995, we had consistent green bars all the way up. Even though we had 1 red bar here, we still need to have 3 in order to change trend, and we would not have gotten out of the market until 2000, right here, and we would have missed all of this debacle to the downside. Now, once we had 3 more green bars in a row, well, it's time to get back in. In 2003, we could have ridden the market all the way up. And then in 2007, before the real damage was done, we would have been out. We would have been out right here and once again missed all of the downward crash coming into 2009. Now, in the beginning of 2010, we had 3 green bars again. And even though we've had splash of red bars every once in a while, we've only had 2 red bars max. We still have not seen 3 red bars. So that's telling us on a long-term basis that we're still okay if we're investing in the market using the S&P 500. You can apply this to any index you'd like, any market you'd like, and you can use the same tool. Now, it's not designed to get you in at the bottom and out of the top. It's not designed to do that. It's designed just to get you in sync with the overall trend. So wouldn't you have liked to have known that, to be out of the markets here before the dot-com crash really fell into full swing, and here before the financial crisis really fell into full swing? That's the beauty of the PET-D. Once again, there are many different ways to use the PET-D, and just using it along with strategy number 4 is just one of them. And we teach you all this in the course. So you see how valuable these tools are. You see how I showed you all these examples where, in one E-mini 24-hour period, you could have generated close to $4,000 just holding on to 1 contract if you decided to do so. Okay, that's how valuable our dynamic duo is. Well, here's what we're offering to all the attendees today. This is our special attendee prize. Now, usually if you purchase these 2 packages individually, it would cost you close to $4,000, about $3,700, okay? We're dropping the price today. We're discounting it down to $29.95, and on top of that, we're offering payment plans. So if you can't come up with $29.95, no problem. All you have to do is contact ProTrader Strategies, put down a small deposit, and you can be simply up and running ASAP and just make small monthly payments, okay? That's the beauty of it. Now, here's how to take advantage of this great special we have for all the attendees today. Once again, contact ProTrader Strategies. If you look on the chat box on the far right-hand corner, you'll see that they've already added a link, a live link to the sign-up page. So if you want to sign up, no questions asked, and get this as soon as possible, simply click on that link in the sign-up page, or in the chat box, I should say, and it will take you to the sign-up page for this special dynamic duo special. If you'd like to contact ProTrader Strategies and put together a payment plan, because that is going to happen just for a limited time only, well, you can email them at trading@protraderstrategies.com, or the best thing would be to simply call them up right now. They have a number of trading consultants manning the phones, and they'll be happy to talk to you. No obligation required. Just you can get some ideas together about what's offered and the type of payment plans that you can structure personally for yourself. Just contact them directly at 310-598-6677, and they will answer any question that you may have. Okay, now speaking about questions, I'm going to open up the question and answer box, and I want to thank you all for waiting. I will leave this screen up in just case you want to copy any of this information down, but let me take your questions right away here. Let's see. Let me ask, hi Steve, does the PET-D paint a buy-sell arrow as on your chart? That's a good question. No, it doesn't. The PET-D will only paint the bar chart. So regardless of chart you're using, if you noticed, I used bar charts with the PET-D. I also use candlestick charts. So it will only paint the chart the color of green or red, because remember, it's a directional tool. Now, where you will get an up and down arrow is on a strategy, because a strategy is telling you a specific place to enter. The PET-D doesn't tell you a specific place to enter. The PET-D just tells you if you are in sync with the trend, and it tries to get you in sync with the trend by coloring the bar. But a strategy actually does tell you when all the rules come together. A strategy says all the rules have been met, you must buy on this bar or you must sell on this bar. Okay, that's why a buy arrow or a down sell arrow is generated. But now, once again, those are only there, we provide you with those in the courses, but they're only there for educational purposes. After a while, we want you to discard them and not rely on them. I have been trading these techniques for years, and I no longer need to see an up or down arrow. I know exactly where a buy signal has been generated. I need the PET-D to tell me, to color the bars, because I use that on a daily basis. But in terms of buy and sell signals, you won't need them after a couple of months of studying, okay? Also asks, do we take a trade after the buy-sell candle has closed? Well, that's a great question. That's all in the course. I don't want to give too much away, but you have the option to do that. Many advanced traders like to take the trade on that bar right when it does close. Others like to wait for the next bar, a little confirmation. It's up to you. We advise most of our students to trade more conservatively in the beginning, and with all students, regardless of how long you've been trading. If you've been trading 20 years or 20 minutes, we want everyone to paper trade first, so you can fully understand the process. So there's really a lot of attention given to educating people. We're not simply about, saying, here's the perfect strategy and system here, just go trade it, you'll make money. We don't believe in that. We want to educate you. I'm your mentor, your personal mentor, answering any question you have along the way, and I want you to practice. Just like any skill, no one jumps right into the arena right off the bat. You have to practice. Whether you're an athlete or whether you're an entertainer, everyone goes through rehearsals. Everyone practices first. It's the same way with trading. You need to paper trade. Okay? Frank asks, does the PET-D repaint the bar candles on a 3 and 5 minute chart? Very good question. No, that's the beauty of the PET-D, Frank. It never repaints. Once that bar has closed, it will always stay that color. So let's say you're looking at a 5 minute chart, okay? Now, while that bar is formulating, while you still have time left on the formation of that bar, you may see it oscillate between red and green, depending if the calculation is right on the borderline of short-term or long-term. But that's not something you see most of the time. If it's, opens green, it usually stays there. And basically, once it closes, it will never change. I know I've followed tools before that change and repaint, and you think you have something, and then you go back and look at it, and you go, what happened to that setup? It changed colors. The PET-D doesn't do that. So if you have a bar close, whether it's a daily bar, a monthly bar, or a 5 minute bar, or a tick chart that closes at green, if you look back at that same bar a month from now, it will still be green, okay? The only time you will see changes in color is if the bar is still open. In other words, it hasn't closed yet. But once it closes, it stays there. It will never repaint, okay? Just want to make that totally clear, all right? Great questions. These are great questions, great learning questions. You see how much attention I give to trying to educate you, because I want you, I really, really feel strongly about this. I want you to take control of your trading. Ask yourself, if these other presentations or these other webinars or websites are doing so well, then why do most traders fail? It's because we're not designed as traders to mimic how someone else trades. We're designed to be in charge of our own style, because everyone comes with different baggage. Some people like to trade conservatively. Some people like to trade aggressively. When I first started trading on the floor, I wanted to be in and out of a trade in no longer than a minute. Now, as I get in my older age, I like to stay in trades as long as possible if I can, okay? So everyone changes, so there's no way you should be mimicking or trading the way someone else is doing in a chat room or a trading room. You should be given the information that has stood the test of time, help someone teach you and mentor you how to use it correctly, and guide you along the way so that you can ultimately be on your own and be happy being consistent. That's our goal, and that's our philosophy at Specialist Trading, okay? Remember, contact Pro Trader Strategies. We realize that not everyone can come up with that sum of $29.95, that special discount, before it goes back up to close to $4,000. But remember, we are offering for a limited time only payment plans. So for a small deposit, you can still be up and running in a matter of moments, and you can be my student right away. So please contact Pro Trader Strategies. They can answer any question you may have, and they can put you together with this great dynamic duo package, so that by the time 2017 comes around, you'll be fully immersed in the knowledge of it, and you'll know exactly how to trade it beginning the new year, okay? All right, in closing, I want to thank you so much for attending. I really wish that you got something out of this. I hope your next strategy will look like this and will be as consistent as what I've just shared with you today. And I wish you the best of luck trading, and look forward to all of you becoming students of mine in the Dynamic Duo course. Thank you so much. I will see you next time. Bye-bye.